We're talking about trading today with Oliver Velez. Oliver, give us your take on current sectors that may be showing potential.
Well, for the last several years, I have been a very vocal and very public bull on the precious metal area, silver and gold. I don't see any dynamics that should change that view. I'm actually I extraordinarily continue to be bullish on gold and silver. In fact, I believe silver is one of the most undervalued assets in the world, despite the fact that it's tripled over the last year and a half or so. SLV is a symbol that I absolutely adore and love. I've been involved in this symbol with my traders from $11. It's in the $40 range, and while we have taken some profits off the table, I think SLV has potential to over $100 an ounce, so I think there's more than a double in it. So all major pullbacks, all major setbacks for that metal, we consider a major buy opportunity. I also feel the same for gold. I think gold trading in the high 1800s to low 1900s is still undervalued. I think I see gold at $4,000 an ounce conservatively over the next several years. So we're very, very bullish in those sectors.
How about geographical regions?
I like Asia. I like the BRICS nations. Brazil, Russia, India, China, South Africa. Those are the BRICS nations. They continue to be the most resilient economies in the world. They're sort of a consortium that's getting away from the U.S. dollar, but I like what they're doing. I like the companies in those regions. I like what those economies are doing, and we'll continue to focus there.
Any particular recommendations within those nations?
Well, you know, I do, not specifically on the individual stock side. We do a lot of ETF trading in that arena, but I will say on the U.S. side, despite the fact that I'm not extraordinarily bullish on the U.S. dollar at this particular point, I think intermediate to long term, the dollar continues to experience some pressure. We are playing some of the currencies in those regions. I love the Brazilian real, and any major setbacks for that currency, we're actually strong buyers with. I do like what's happening with the Chinese renminbi or the Chinese yuan, which we're certainly involved with. On the U.S. Stock side, I actually like the stocks that are economically that are tied to the American economy. I think Home Depot, HD is a great symbol and it's actually a leading indicator of the U.S. economy. So when Home Depot starts to show strength and starts to rise and starts to make monthly new highs, that's a symbol that's basically giving the world an indication that the U.S. economy is sort of strengthening. Another leading indicator is Harley Davidson, symbol HOG. We call this theory homes and hogs. When individuals are willing to spend money on their homes or buy new homes and fix them up, or take some ancillary income and buy a Harley Davidson, things are starting to improve. So we watch those very carefully, and that's an area that we're watching very carefully right now.
Now, Oliver, you mentioned some currency plays. You mentioned Home Depot and Harley Davidson. Do you personally own any of these or in an institutional portfolio?
Yes. Home Depot is an actual holding of ours. HOG is a very light holding of ours. These are not plays that we've gone into extraordinarily heavily at the moment, but we are actually gradually starting to put on our line, as they say, our position. And so we tend to accumulate over anywhere from an 8-month period for these some plays to a 24-month period. But we think a year to a year and a half out, you'll see these symbols higher.
Thank you so much for these ideas.
Well, thank you as well.
You're watching the MoneyShow.com video network.